We leave you with the management of Waaree Energies Limited, which listed at a 66% premium today. We spoke to the chairman and managing director, Hitesh Doshi, on the company's use of proceeds and a lot more. Listen in.
Company is now increasing the capacity from 13 gigawatt to the 21 gigawatt. As well as we are going in a backward integration. Of course, one of the cell manufacturing capacity is going in a upstream in this financial year. But apart from that, we are going for the additional cell, wafer and ingot facility. So companies are completely expansion mode. And of course, the money which we have raised, it will be used, majority of it will be used for the backward expansion of these products.
How is the capex plan for the next 2 to 3 years for the proposed capacity additions?
For the next 2 years, like what I have mentioned about going into the 6 gigawatt of ingot wafer, we'll be investing around 9,000 crore in this plan. Of course, company has already tied up for a date long time back. Company, you know, that is quite on a strong cash position, almost debt-free company, and this additional fund. So with all that way, company is all ready in terms of the finance.
And in terms of, as and when the new capacity comes in terms of the revenue potential that it would, indicate for the company, could you give us some context on that?
From 13 gigawatt today, we are going to the 21 gigawatt, right? And same time, we are going in a backward integration. So this gives a clear idea what is the company's plan and how company is going to increase their top lines and the bottom lines.
And in terms of, with solar wafers and solar cell capacity coming in, would this also kind of benefit your costs? Because these are key components for making the solar modules.
Right. Of course, when we are going into the backward integration, that will help to improve our bottom lines. But the most important is it will be the security of the supply chain. So globally, customers are looking for the alternative supply chain. And when we will offer them made in India cells, ingot and wafers, that gives the edge over their requirement, or I will say competition, but the most important will be able to satisfy, fulfill customers' requirements.
But coming back to the cost perspective, in terms of how it could impact your margins, is there maybe a range that you do expect your margins to benefit or improve from?
It will be difficult today to answer that, but definitely it will help to improve the margins.
And there are, because of the importance and the influx that the solar industry is getting as a whole, there's a lot of solar cell and module capacity coming on stream. What's your view on competition in this space?
So I think the investors' trust and confidence in the last IPO has answered all these questions. 97 lakhs plus applications, precisely 97.3 and all. This gives the clear trust of the investors and on our Honorable Prime Minister's vision, as well as the country's plans and the global energy transition. Of course, the biggest confidence is on our company, our plans and the management. So all these future worries have been very well came on the board, and it was record breaking in all terms.
And in terms of FY25 growth, your last 3 years, you've seen, very significant growth in the company. What is your outlook for FY25 as a whole?
We'll continue to grow. We'll continue to expand our manufacturing capacities. We'll continue to add on the products. The company is moving from solar to the complete energy transition. So that means whatever the products we'll need, we discuss about the hydrogen, we are setting up the electrolyzer factory, we're talking about the batteries and many more products. So as a company's plan is to continuously increase the product lines, capacities, backward integration. This gives a clear indication in which way we are moving ahead.